For years, we've heard one story about America's housing crisis. But what if that story is missing the single biggest piece of the puzzle? Today, we're diving into the hidden reason we just can't seem to build our way out of this shortage.
It really is the central question, isn't it? We all feel it. The crazy high prices, the super tight inventory. So with all this demand, why aren't builders just building more? Let's get into it.
Okay, first, let's just wrap our heads around the scale of this thing. The US is short about 5 million homes. Now, estimates from experts do vary a bit, but that's a pretty solid midpoint. It is a massive, massive deficit.
So whenever you ask, hey, why can't we build? The answer you almost always get points to one thing. For years, the entire story has basically revolved around this one particular culprit.
And yep, that culprit is zoning. We've all heard it, right? Restrictive local land use rules, all the red tape, the regulations that stop developers from building more densely. And look, that is absolutely part of the story, but it is not the whole story. And this is where everything starts to shift. Check out this quote from Paul Williams at the Center for Public Enterprise. He says, yeah, zoning's a big part of it, but the financing piece is core, especially for apartment buildings. It's about the money itself.
And that brings us to the real bottleneck. See, it turns out that even when a city gives the green light and says, yep, you can build here, that permission doesn't just magically make a building appear. Having the permission to build isn't nearly enough. Here's the crucial distinction you have to understand. Easing up on zoning laws, that just creates the capacity to build. It creates the opportunity, but you still need the capital, the actual financing to get shovels in the ground. And one without the other gets us absolutely nowhere. So, what even is this financing we're talking about? Well, specifically, it's called multifamily financing. It's the money used to build big apartment complexes. And unlike getting a mortgage for a house, this is a really complex financial web, and it's incredibly sensitive to things like interest rates and what big-time investors are willing to bet on.
Let's break it down real simple. A developer can usually get a bank loan for about 60% of a project's cost. But they have to go out and find investors to put up the other 40% as equity. And right now, with interest rates so high, finding investors willing to fund that 40% gap is incredibly difficult. Their potential returns just don't pencil out.
And this financing crunch has a direct impact on the numbers. You can see it right here. To close that 5 million home gap within a decade, we need to be building about 500,000 multifamily units a year. Where are we at right now? Only 350,000. That is a huge shortfall year after year after year.
This quote from Williams just perfectly captures how absurd this whole situation is. Think about it. We have a massive housing shortage. That means enormous demand. And yet, projects that would serve the market literally can't get the funding to move forward. Like he says, that means something is fundamentally broken with the investment environment itself.
But here is the good news. This isn't some unsolvable problem. In fact, we have a playbook from our own history that shows us exactly how this can be tackled. If you look back, federal policy has kicked off major housing booms twice before. In the late 60s, it was new tools like mortgage-backed securities that basically flooded the market with cash for housing. Then, in the early 80s, some simple changes to the tax code made investing in apartment buildings way more attractive. Notice a pattern? These weren't zoning changes, they were financial changes. And the biggest lesson from those past wins is that the goal isn't just a temporary spike in building. The real challenge is to create policies that push construction numbers up and keep them up for a sustained period, long enough to actually make a dent in that 5 million home deficit.
Okay, I know, this all sounds a little high level, right? Federal policy, investor equity, but how does this actually affect you when you're just trying to buy a home or find a new apartment? Let's connect the dots.
Well, the impact is really direct. For anyone trying to buy, it means inventory stays painfully tight. For all of us, it means there's this huge backlog of projects that are already approved but are just stuck in limbo waiting for financing. We fall further and further behind on building apartments where we need the most, and only the smaller, less complicated projects actually move forward. And hey, for the real estate professionals watching, this is a bit of a call to action. The folks who put this research together suggest that agents who are feeling the pain of low inventory should be talking to their local realtor associations, really pushing them to get more involved in shaping policy that can actually improve housing supply.
So, after all of that, what's the one big idea you should walk away with? What's the bottom line here? Here it is. Fixing the housing crisis goes way beyond just fighting over local zoning laws. The real solution lies in fixing the flow of capital. This is a national investment problem, and it's going to need national policy solutions.
And that leaves us with one final thought to chew on. We've done this before.
We have actual historical proof that smart federal policy can unlock the private investment we need to build millions of homes. The playbook is already there. So the real question is, what's stopping us from running those plays again?